Good evening, everybody. Welcome back to Eating the Elephant, our series on Facebook Live where we talk about Hurricane Michael recovery and insurance information, and we break down this giant elephant that is hurricane recovery into bite-sized pieces for you. We're talking to you this evening from Orlando, Florida. I'm here at an industry event doing a little bit of work, and so I've learned a little bit today. I'm hoping to learn a lot more tomorrow about some of the response, some of the things that are going on legislatively, and some of the way that other players are going to react to the recent changes in some of the legislation that we've had. But I want to start with something I learned today first, which is that Ashley Moody, who is I'm having a blank moment here. We have a no scam app is what I'm trying to get to. I'm sorry, I'm having a rough day today, I guess. We have an app that we can report price gouging, we can report fraud, we can report scams. Ashley Moody is the Attorney General of the state of Florida. I'm sorry, I just had a gray moment there. I apologize. Anyway, she's developed an app that you can very easily load on your phone. You can just Google, Florida No Scam app, and you can load it up either on, it's good for Apple devices or Google. It'll be in the Google Play Store or in the Apple Store. And it's a very, very simple. I looked at it today. I haven't loaded it on my phone yet. But you take a look, you enter the name of a business, you tell Moody's office what's going on, and they'll investigate. And I think it's great that we can make reporting bad behavior very, very simple, because I think that means that more people will be likely to do it, and we need more reporting of bad information and more supporting of good information and good players. I wanted to move beyond that, and I want to talk a little bit about insurance for a second, of course. I've got some more questions this week about demolition, and I got some over the weekend in particular from people via direct message and such. The question fundamentally is, I've been paid out all of my limits on my home under Coverage A. I've been told my house is a total loss, and therefore my insurance company says I have to demolish it. It's not true. You simply do not have to do that. How you decide whether or not to demo your house or rebuild, repair, that's completely independent of the decision to pay out Coverage A limits. And it shouldn't really matter. If the insurance company determines they're going to pay you all of your limit and they say that your house is a total loss, well, that is an administrative and legal determination on their side of the house. That means they write you a check for your Coverage A limit. We could talk about your ordinance and law coverage as well here in just a minute. But what it means is they've got to pay you the money. And it does simplify the process, but whether or not you demolish your house is your decision. Code enforcement, flood rules, there's going to be an awful lot of things that will figure into that decision, and you don't need to just take some adjuster's word somewhere that you need to demolish your house. I've said this over and over and over again: your house, your decision. You decide what happens, of course, within the limits of the law and within code enforcement. If you have any specific questions about your situation, reach out, shoot me a direct message or an email, and I'll be glad to tell you what I know. Code enforcement has been very helpful. They've been very good about giving people information. Where we have seen some difficulty is third-party players such as consultants, public adjusters, and attorneys, and in some cases agents. I don't mean to point fingers outwardly. Some of those fingers need to come toward the agent community as well. But they're not giving people really effective advice. In some cases, they're ignoring flood zone regulations, and in some cases, I think they're misinterpreting them a little bit. So the best way to go about this is to do the research yourself, do the homework yourself, talk to code enforcement specifically, and if possible, get them onto your property. Along those lines, I'd like to suggest that you invite your agent for a visit. I know that sounds a little cheesy and it's meant to just to get your attention, but what I would genuinely suggest is a matter of review of your insurance. We've talked over and over. I've suggested a number of times that you go to your agent's office, you visit with them, and if not your current agent, if you're dissatisfied with their service, I've suggested that you go visit another agent at their office if you're considering hiring them. Probably more than one, probably not more than two, because most of us in town are reaching out to many of the same insurance companies, and if you get to too many people, we end up bumping into each other, frankly. And if I know I'm going to bump my head into 3 or 4 other agents on something, then I'm probably not going to burn a silver bullet to get a particular quote or get something done. So it's certainly good to shop around, but don't shop around everywhere all over the place. because again, we go to a lot of the same places, talk to some of the same insurance companies and underwriters. So be judicious. But I've talked to you about going to your agent's office, meeting them face to face. If you decide you're going to stay with your agent in particular, and you're maybe a little confused on your coverage, or you want to consider maybe changing, you just want to be better informed, ask your agent to come see you. There's no reason whatsoever your agent shouldn't be able to come to your home and help you go through your risk, some of the things that you have concerns about. And what would be the most helpful is if you could take a look at your policy, maybe make some notes on it if you have particular concerns, have a copy of that with you, and make an appointment with your agent and ask them to come to your house. You'd be amazed at what an agent that's paying attention can find out, and we can discover things that we might not otherwise know about. Some really good examples are if we came to your house, I could say, oh, what a great dog. They need to be sure they have animal liability coverage. That's certainly an interesting thing. If we see a lot of outbuildings, then we've talked about other structures coverage lately and how that applies and how much coverage you have and things such as that. If we come out to your home and we look and we see, oh, you've got a lot of fine arts, a lot of antiques, a lot of special kind of items, then we may want to suggest different kinds of coverage for you. If you have a pool cage, I may not know that if we're talking over the phone, but if you can put your agent's eyes on your home and the thing that they're going to insure, that gives you the very best chance for a good result. Now, I want to say this very specifically. I do not think that needs to give an insurance salesperson an opportunity to sell you a new product. I don't think this is a sales opportunity. This is a research opportunity. This is a fact-finding mission. It's not an opportunity for somebody to come out and stand in your living room and try to sign you up for something new. What I would suggest you do is to absolutely, patently, while your agent is there or salesperson is there, do not buy anything, do not sign anything, simply gather information. And my dad gives some of the best advice on the planet, and he's always told me if I have a significant decision to sleep on it. So what I would suggest you do is talk to your agent, make some good notes, think about what's going on, sleep on that information, and then contact your agent the following day and give them instructions as to what changes you might think you want to make. So invite your agent over. One of the things that has come up fairly recently, it doesn't affect a lot of people, so I haven't talked a lot about it, is in-home businesses. A lot of people are running small businesses out of their homes these days. My wife, for instance, has an Etsy store, and she makes and sells jewelry. Great stuff, by the way. Poseidon's Pearls is something you're going to want to look at if you're looking for a gift. But she has an awful lot of stuff. She's got pearls and leather and clasps and all kind of findings and things like that. It's a significant investment for her. And business personal property is covered only a very, very little bit in a homeowner's policy. It is typically limited to $1,000, in some cases $2,500. But if you have a laptop and you have, say, a little bit of stock, let's say you're printing and selling T-shirts. You've got a T-shirt press, you've got your transfers, you've got T-shirts, things like that. And if we were to have another hurricane and all of that stuff were to be destroyed, you probably would not be properly covered. A typical in-home business policy costs $300 or $400 a year. It also includes business liability, which is very, very important and something you might not have thought of. So if you do business on your own, from your home or out of your home, that's something you may want to consider, and I would call my agent. I want to talk a little bit about wind versus water, and I don't want to belabor this because it's something that certainly we could spend 1 or 2 or 3 episodes on just by itself. We've talked about wind versus water, and by that I mean windstorm coverage versus flood coverage, windstorm damage versus flood damage. I don't want to get too deep in the weeds here, but there is this very specific question that's been posed. Can I collect full limits of insurance from both my windstorm policy, or maybe your homeowner's policy if it includes wind, and my flood policy as well? Absolutely you can, and matter of fact, in a total loss situation where your home is just nothing left but a slab or a pile of rubble, chances are you will collect full limits on both of those policies. Some people get a little bit confused as to how you can determine, particularly if there's very significant damage, a lot of structural damage, for instance, how do you determine what's wind damage and what's water damage? Very, very controversial topic. It's something that a lot of experts debate quite a bit about. But frankly, most of the time, unless you have a rubble pile, it's really not that difficult. If you walk into a home and the roof is torn off, but there's a water line 2 feet up the wall all the way around the building, well, frankly, you've probably had 2 feet of storm surge of water in the home. And anything below that line is going to be flood coverage. The typical way to go is that a mitigation company will come in and cut out all the sheetrock to 4 feet. 4 feet is a standard, and the reason is because, well, drywall is 4 feet wide. So when they come back in to patch it back in, they take that drywall sheet, they lay it on its side, and they put it in. Anything above that line, frankly, is probably going to be wind damage. There are certainly exceptions to that, and there's going to be an awful lot of controversy when you're dealing with outbuildings, when you're dealing with docks, boat houses, seawalls, things such as that, because there's some very, very tough limitations on coverage, particularly in the flood policy. So if you have specific coverage questions about that, let us know. But very likely when you get to issues like that, a structural engineer is going to become involved and be hired by one or both of your insurance companies, and the engineer will better be able to determine what caused the claim, what caused the damage. I want to go to something final to close, and it's a little something, it comes from the business side of the house, from my business clientele, and I think it is equally applicable to my homeowners clients, and I wanted to mention it, and I haven't done so before. I want to talk about cash management, and I know that sounds like a funny thing for an insurance guy to say, but when I talk to my business clients, one of the things that's a big concern right after a big storm, particularly something like this, is cash flow. A business is used to having cash coming in every day that it's open, and when suddenly that stops, that doesn't necessarily mean all of your expenses go away, and cash flow can become a real problem because, as we've all seen, particularly in a Cat 5 storm, it can take a very, very long time to get insurance proceeds moving. So, what I would suggest to you is we've got, after this storm, a lot of us have seen some pretty big deductibles. 2% is probably the most common windstorm deductible that we've seen, although there have been some people that have experienced 3 or 5. We've even seen somebody with a 10% deductible. Those are some pretty big numbers, and if you don't have money in the bank to cover those deductibles, it can be very uncomfortable and very difficult to engage contractors. So I'm going to make a suggestion to some of you. What I suggest to my business clientele is that they go down and they set up a line of credit. It doesn't mean you borrow money. It just means basically you do all of the paperwork to borrow money, and you often have to pay a small fee, and the bank makes you a promise to make a loan. You can do something very similar with a HELOC, a home equity line of credit. You can go and talk to your bank, and if you have existing damage right now, it's obviously not the time to do it. But this is a conversation you want to have well before a hurricane. It's not the kind of conversation you want to have when you come home after an evacuation and see most of your roof missing. When you get settled, when you get all of your stuff done, your work is completed, your claim is closed, go talk to your banker, to your mortgage company. You may have a new one or may be looking for a new one because of your experience, as some people will be doing with their insurance companies. But what you could do is you can set up a line of credit, at the very least, to cover some immediate expenses and possibly your hurricane deductible as well in the immediate aftermath of the storm. You're going to want to have some very specific conversations and make sure that you're not going to be asked a bunch of questions when you want to draw on this line of credit after the fact. You want to have this as a guarantee that the lender will provide you this loan when you need it. So if you walked in this past October 15th and said, I need $10,000 right now, I need it in my bank account by close of business, if you set that up properly in advance, then you could have access to ready cash. Now, I would say this to you as well. That doesn't mean it's time to go on a spending spree. This is money that needs to be held in the bank, in their name, in their accounts, until you really, really need it. It's not something that you need to go in and just start chipping away at, because then you're just going to have a higher debt load and you're going to have the same problem. If you're not able to do that, your best solution is probably talking to your insurance agent and reducing your deductible. That can be done. We're getting lots and lots of offers from insurance companies now to reduce deductibles from 2% down to a flat $500 or $1,000 or $2,500. But you know that exact number, and you don't have to look at, say, a 2% deductible on a $300,000 home. that's a $6,000 deductible, and that can be a tough bite. So if you can reduce it to a flat amount that's smaller, if that works better for you, now's the time to do that as well. The thing that you want to think about there is the additional premium. Obviously, a lower deductible is going to mean a somewhat higher premium. Those differences tend to be fairly modest, but when you talk to your insurance provider, what you need to do is ask them for several different options, and then you can sort of calculate and you can move those little sliders around in your brain and see where you think the sweet spot is of premium savings versus deductible size and how much risk you're going to have to retain. I think we're going to leave it there. We'll be back obviously on Sunday. If there are any topics you'd like to see us discuss, please shoot us a direct message, leave something on our Facebook page, or shoot me an email if you'd like. Hope you have a good week. I hope it's very productive, and I hope it's prettier down there in Panama City, or up there in Panama City, than it is down here. It's awfully rainy in Orlando. We'll see you Wednesday. We'll see you Sunday.